Welcome back, everyone, to another oil tanker update of the week. My name's Adam, and we're going to go over what the oil tanker industry is looking like, as well as if I see any short-term or long-term plays in the oil tanker market right now. So let's just give a quick update on my position. Of course, we are down 44% or $900 on 350 shares of Nordic American tanker stock. My average cost basis was $5.70, and right now the current price is $3.15. Okay, and of course, I'm not down exactly this much. Because if we can see here, I've received $156 in dividends just in my Canadian account, and when I transferred it to my US account, I received another $21 right here, and that's from, of course, Nordic American Tankers. So if you add those two up and subtract how much I'm down, I'm still down about $600, which is not nice. But again, I have been holding for over a year now, and I will continue to hold NAT stock, not only for the dividends, because if you're looking at the 1 year chart right now, this stock is down by 56%. Okay, and I do think we reached the bottom in around January/February, and since then we actually can see a bit of a 10% uptick in the stock price, and I think this has a lot to do with the end of the pandemic, increase in travel, increase in spot rates once again, and we're going to go over all of those. Okay, so Frontline over the past 5 days, it was up by about 1%, and EURN over the past 5 days was down by about 4%. Out of all these stocks right now, I definitely like EURN quite a bit at around $8.20. If we're looking at the 6 month chart, it was actually up by about 4%, and I think it will continue to increase. Okay, I also do like the valuation of Frontline as a pretty nice dividend, and of course I do like NAT at these prices right now. And I could see a year out, we could see NAT being maybe around $4 or $5. So of course I'll be holding all my shares until then. Okay, and of course the share price of oil tankers closely coincides with that of crude oil. And crude oil, this is the year chart, we can see did a nice little run up from May to about, let's say, July. And then there was a consolidation phase where it was like, $40 for quite some time. Then it actually hit like $35 up until November. So here there was a big consolidation phase. Oil then rose again from like November all the way to, let's just say, March. And now again, we can see another consolidation phase where it's maybe will be flat for quite some time. Of course, depending on what happens with inflation, what happens with energy demand. If we're looking at another key metric, which is the time charter equivalents or the spot earnings, right now, in order to book out a Suezmax vessel, you need to pay $8,600. And the 2021 year to date was $8,800. So kind of in line with what we're seeing for the year to date spot rates for Suezmax vessels. And same thing with VLCC, which carries twice as much oil at 7,200, and Aframax, which carries 7,600. Which the spot rate is 7,600. So if you're more of a visual person, here's the graph. This is the year-to-date chart, and of course, huge decline in rates since last April when everyone was there was so little demand for oil, but so much oversupply that these vessels, especially the VLCC ones, were being used as floating storage. Okay, and of course the rates were like at $250,000. Okay, you compare that right now, the rates for VLCC carriers were $7,200. So significantly lower than what we have been seeing, and that's why these tankers have been hit so hard. Okay, but again, as a long-term investor, I like to look at the outlook for oil, and what I do see is that outlook for oil is pretty darn good. Number one, of course, you have the consumer price index, which is a measure of inflation. It increased 2.6% for the 12 months ending March 2021. Now, that doesn't say much because a lot of for example, oil went into negative territory. Okay, so of course, inflation is going to go way above that if you're looking at a 12-month chart because it compares from when oil was negative. And oil is a key metric when you're looking at oil inflation. Okay, so right now, 2.6% is the same thing we've seen since like 2018 when it rose 2.9%. Okay, so that is concerning, especially if inflation keeps going above that 2.6% target that we've been seeing. So That's number one, okay? And of course, when you're trading commodities, uh, those commodities tend to rise or they hedge against inflation because literally oil is one of the measures of inflation, okay, when you use to calculate inflation, okay? So um, the next thing is, I think it's a little dumb to sell out right now of the tanker market because this is when the tanker markets have the most bleak outlook. Okay. And so there's this bleak outlook for tanker shipping until the second half of 2021. That's what many people are projecting when the spot rates will actually start to increase. What's not helping is this is the world chart for Roni cases. As we can see, when lockdown hit, cases were rising, and there was actually a mass decrease in cases, but especially due to the new variants and cases rising in India, went from like around, 500,000 cases in one day all the way to 2 million cases in a day, which is absurd, okay? And I mean, if you're just looking at the US, um, we can see that cases, this is the like first wave, second wave, or third wave, I guess, if you count this as the first wave. And now cases are dropping rapidly as more than half the population has been vaccinated. Okay, so of course, it's disconcerting that if you look at the worldwide chart, there's a huge spike in cases. And so pandemic might have to ban travel and restrict going out for a little bit of time. But I do believe maybe give it a month or two and the cases will be back down, okay? Especially as herd immunity kicks in. Another factor is travel is on the rise, okay? So if we look at, just a few reports from March 15th, air travel jumps as vaccinations spur vacation bookings and stocks surge. Travel planning on the rise after a year of pent up demand. So a lot of people really, really want to travel. Okay, and I think this will be really good for not only oil, but of course for the oil tanker industry that needs to transport this oil. Okay, so that's why I'm pretty bullish on the tanker industry and why I will be holding my shares not only to receive the dividends. Of course, NAT is a huge dividend paying company. But also to take advantage of the increase in the transportation of oil. So let me know what you think about my outlook. As always, please be sure to smash the thumbs up button. It helps tremendously. And subscribe if you haven't already. As well, you can check out a free Discord link down below where we talk a lot about penny stocks. We have had a couple of good suggestions. For example, the merger with Fire, it's an MJ stock, and it shot up 30%, but that was announced before in the Discord group chat. So you definitely would like to want to take advantage of that if you would like, as well as of course if you click the link to either my Patreon or Vinny, you can get my real-time buy and sell orders for $5 a month, and then there's a little tier. So let me know if that's something you're interested in. Take care, have a fantastic day, and of course, love you all.